Bitcoin has gone back to its home, trading comfortably at $20,000, driving probably basically everyone in this market nuts. But I don't think there's any doubt that we remain in a bear market, that there's little reason to believe that things have turned around for now. I know that's definitely the opinion of my two guests, Crypto Birbs and Big Cheds. Guys, you know, we've been doing the Thursday roundtables, but we wanted to bring back the trading roundtables and really start to talk more about technical analysis and markets. So, of course, that means I got to bring on some legends for this conversation. You guys do not want to miss this one. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and join Birb and Cheds at the exact same moment backstage hitting the like button. They're going to do it together. You guys just can't see them yet. So yeah, guys, I hope you all had a wonderful weekend. Seeing stock futures open down a bit here, but Bitcoin kind of boring. We had the dip, of course, but seems to have bounced right back. As I said, sort of a Happy Gilmore quote, go to your home. Are you too good for your home? I think Bitcoin's home right now is around 20,000. So as I also said before, we're going to start doing these trading panels. I know you guys love it when we get the greatest minds together to discuss things. And so I did that, right? But before I bring them on, we're going to check out Bullish down there. Obviously, all of the benefits of your favorite sexes and dexes, which sounds dirty, but it's not. Yeah, with deep liquidity, you guys know we have Surin on every couple of weeks. We're going to start bringing on some other people from there to help us analyze what's going on with the markets, particularly with liquidity, ordered book depth, things like that. But if you have not checked them out, it'll make me look really good if you click the thingy right down below. And without further ado, I'm going to bring on our guests, everyone's favorite dancer, Big Cheds, and of course, the best beard on the planet, Crypto Birb. What's up, fellas? How are you?
Shaba.
I'm good.
Shaba ranks under that max. I wouldn't even know.
That's it, brother. Good to see both of you gentlemen. Nice to see you all. Thank you so much.
Likewise.
How are you, buddy? I'm
really, really good, man. I'm really happy to talk to you always. And looking at Cheds, I cannot ever stop smiling.
Well, I'm trying, for everybody else, I'm trying to get both of these guys to come to Las Vegas with me in the middle of October to teach some master classes in technical analysis. Cheds, I don't know if I'm going to get him there, but I know that Birb's going to be there, right? You're there?
Yeah, I love that.
Cheds, can we pressure you on camera to showing up?
I love Vegas, so it's not a hard sell. I'll tell you that much.
Yeah, October 10th to 14th, there's the WebEx conference there, and I'm actually hosting an entire stage for 4 days, which means that I need a hell of a lot of help from people smarter than me like you guys to show up and help me relieve some of the burden of having to be on stage for 4 days. So anyways, guys, as I said before, I mean, in my opinion, we've basically been in the bear market since we broke like 52,000, right? But there's been zero almost indication of any meaningful bounce or reason to start feeling bullish. How about Chad? Do you want to take that one first?
Sure. And by the way, I just want to say congratulations to Crypto Birb for completing CMT level 3 and becoming an official CMT. That's something that is really impressive to me. I know how much work goes into that. So good work, buddy.
It's awesome.
Thanks so much, man. I appreciate you. Love you, man.
So what are we doing? What are we talking about? I mean, Bitcoin, it's been a downtrend, almost unabated since November, but we've had two pretty strong relief rallies. We had the February, March, relief rally, and we had this recent one. We kind of know how we topped off weekly time frame. Actually, I'll go daily and I'll jump back to the weekly. And I was talking to Birb about this on his spaces recently. So after we topped off in November, it's so long ago, right? After we topped off in November, we essentially went straight down. And then January, February, we started to go sideways. I'll draw a little box. People can kind of see what I'm talking about. We started to close above the EMA 34. So let's just, it's early in the day. I'm gonna try to do this quickly so people don't get, can kind of hang with me here. So EMA 34, the yellow line, you can barely see it, but it's an exponential moving average. We started to close above it. And that was important because the price had previously rejected there on these relief rallies, these little bounces, overextension moves, below the lower Bollinger back to EMA 34. And then we went sideways. We tried to break out and we got rejected here. Boom. daily MA200, right? And then we were kind of back into that unabated downtrend, rejected 34, rejected 34, rejecting the 34, stop me if you've heard this before, rejecting the 34, and then we started to recapture it. So we were in, a strong little relief rally here. And if you go, daily, now we'll step back out to weekly, and I'll put all my fancy lines and squiggly lines back up. You can see, if you look at the weekly chart, we've actually only closed above the green line 3 times since the November top. It's the 8 EMA on the weekly time frame. We did it here, right, when we did February, March, and then we were here. Oh, boom, we're closing above the EMA 8. Are we beginning a larger move? We're thinking, are we going to go to 28K? Are we going to, get up to 30K at that point? But it turned out to be a deviation. So we saw a really nice relief rally expressed here on the weekly chart. And then you see it, you kind of jump in. Well, what did it look like on the daily chart? It was the EMA 34, and then it was essentially establishing a base, breaking up above the base, holding it, and kind of, pushing up higher. But we started to get these warning signs, all these upper shadows, right, Birb, at the upper Bollinger, the top of the channel. And then we had this gravestone doji here. It looked like it was probably going to start to top off, because at this point, we were looking at bearish divergence with the on-balance volume. It should confirm when you make a higher high. But what's interesting, and I know Mr. Melker uses RSI for divergence, does a really good job with it. I tend to use the OBV, and if you note, we had the price making a higher high, making a lower high, making another higher high, another lower high, and then another higher high. And again, it's based on candle body. That's when you calculate divergence. So we had 3 unsupported new highs in the price. Big warning sign, and then the gravestone doji, and then you get all this price action right here. It's the doji in the 11th. Sorry if this is too technical, folks. I just want to get this out of the way. Then we were just trading in the shadow of the doji, right? Patient shorters were looking for the price to retest the top of the doji, to reinitiate a short, right? You don't want to enter when a bearish candlestick closes. You want to enter when that range is retested. That's when you get a much better risk reward. And then we had this candle, the outside bar on the 14th. This candle here was interesting, right? This outside bar on the 14th, because it created an upthrust, basically a brief break of the top of the doji, right? So this gave you a little short signal. You thought, okay, I'm great. I'm in this beautiful short from 25K, but then you got stopped out the next day. And then you had another outside bar. So you knew a top was coming, but it made it really hard for you to get into one. It was a very choppy kind of toppy thing. But if you were patient and you said triple bearish divergence, shadow of gravestone doji, double outside bar, and since then we've had some follow through. And of course, the rising wedge that pretty much everybody drew. I'll draw it really briefly. You can see that. So that's kind of how we led into where we are now, likely heading back towards a test of range lows. I'll just finish up briefly. I want to hear what you gentlemen have to say. One possible bottoming scenario, and of course, you've heard me talk about 12 to 14K. I think that would be interesting if we get there, but we have to deal with this low first. So after we reject it here, I'm thinking of a possible W with a slightly lower low, another stop loss sweep, essentially breaking below the initial low, scaring people, and then maybe we get a spring. That's one potential setup I'm on watch for, but it does seem like we're drifting back towards range lows, daily EMA 8 resistance, pretty standard at this point. Back to you, gentlemen.
Awesome. Birb, you got anything you want to share with that?
Yeah, there is a whole bunch of it. Just want to say back with entire, loads of kindness to Cheds. I love how Cheds actually puts all those, beautiful words in action. So definitely worth following both of these dudes on the streams, Scott and Cheds. Further down the road, I think Cheds made very, very valid point about this substance of rejections, right? We had, I cannot even count how many, but there were tons, right? I can show
I have
my
to
charts
say,
in a second.
I've literally had this on my chart, the same thing, all circles,
Yeah.
just like Cheds did
Well,
for me.
that's what we have self-fulfilling prophecy for, right? Eventually, when many people catch up in the same way, then it definitely has some correspondence with the price following to it. But most importantly, the way I was looking at it, if I share my chart real quick.
Yeah, bring up your screen.
It should be on.
I see all of us, so you want to do it with the tab and not the whole thing. Or I think there you go. Yeah, cool.
There you go. All right, so I can even turn off the
bar
video.
chart, baby.
I'm gonna even make it bigger for people. so they don't need to see our faces the whole time. There you go.
Oh yeah, cool. So here truly, well, let's clean this up entirely, just to kind of like have a blank card. So the thing I was the most, I should say, concerned on one thing on the technical side for Bitcoin was the fact that it was unable to push through, to follow through, right? We had this entire series of failures, as in we had the high, right, resistance shape, then rejection, of course. Another high which pierces through. However, it didn't manage to make a support out of the prior resistance, right? So the polarity change kind of like flip, just fails. And then you actually just pierce lower. Every broken pattern, every failed pattern actually just commits to a larger breakout in the opposite direction more often than not. And it's repeated many, many times down the road, right? So you had this kind of like a, dead walk, upwards in a way. So this was, trend definition by the Dow theory tells you that it's in a subsequent highs and lows ascending, right? While at the same time, the Elliott wave practitioners will look at it in a way that this is more of a corrective wave rather than a trend, mainly because you didn't really have this entire demand block building up somewhere below the lows to shape and let it push higher, right? So it didn't manage really to catch any sort of like momentum down there. So that was the fact that we really did not manage to climb and really sustain the breakout somehow, but we kept failing every single time we broke to new highs. This was like a major warning sign to me. Still, opinion is one thing, as trend and trading is another. I'm a trend follower, right? So whenever I get to see some sideways, I basically get chopped on the side on the stops, right? And I need to re-enter. And whenever there's an opposing signal, I just wait and cash. However, about 30% of the time, which is 3 out of 10 instances, you would get this large and massive drop in volatility, kind of like a base breakout, right? That is truly valid. And that was exactly what happened locally with this break out of this rising wedge, right? So we got not this kind of like a noisy breakout that was just, mingling down there, somewhere at the thresholds, but it was like an actual burst in one direction, right? Here it was to the downside. So this is this volatility confirmation. There's a normal volatility led to the breakout, and at the same time, this committed with an overall top breakout failure. So I would add that having this technical insight into Bitcoin, that it not only failed to develop a trend out of that, but it was more of a corrective wave, then actually failing to break out on tops locally, right? With subsequent with a couple of lack of follow-throughs, then you're looking at this confirmed breakout to the downside based on the volatility, and another breakdown, coming off with this half mass formation, whatever you name that. Then I would argue that we are deep enough within this entire zone of 17.5 up to 25K, that I would argue that we have really better odds of falling off the cliff and dropping even lower below June lows, rather than actually pulling back immediately and just start trending out higher. And the reason for it is, real quick, when we have this really cool tool, I really got it, on the way of preparing for my CMT exams and everything. This is called RRG, which is relative to rotation graph, and it basically has two axes. One is relative momentum against S&P 500, and the other is relative strength against S&P 500, which is right there at the intersection at 100 and 100. So anything on the right side is basically a relative uptrend, and anything on the left side is basically a relative downtrend. So Bitcoin, for the past 5 weeks, because this is basically corresponding with the 5-week basis, over the past 5 weeks, it had a decent boost on the acceleration on the momentum, as in the momentum relatively was gaining, as opposed to S&P 500. However, it's still in the relative, underperformance, but it kept underperforming very consequently and in a very consistent way and manner, in a way that many stocks take, like even simple as Dow Jones Industrials here as an average, to have the composite view. You got this bear market rally which continued and pierced toward 200-day average. Bitcoin did not even manage to actually climb to its 200-day average. If we display it, it should come up.
That's a great point, Birb. That's a great point.
Thank you. We'll display. There you go. Right. So just a quick summary. Many stocks, S&P 500, take it as a good touch point. Did claim this touch point, this base touch, at that 200-day average, which in my opinion was actually this pretty cool warning to a potential extension, while Bitcoin did not even manage to climb this, right? In order to catch up with stocks at the moment of Bitcoin peak, you would have to pull another 40-50% move just to catch up with the stocks, which it failed. And it failed very thoroughly, if I were to say.
Yeah, so the picture not really that great for the moment.
Right? Well, that's what it looks.
Hold on, Scott.
I mean, I agree, and I'm a natural bull, so.
But if you're a maxi, don't you want to buy lower? Like, isn't this a gift? Isn't it like saying, "Oh, Christmas is going to come every day for the next, 3 months"?
I think that does pose the question of the entire stream, right? Which is like, how should you be managing through this bear market? And I think like it's somewhat obvious, right? For a guy like you, certainly Cheds, I short the shit out of it, right? Of course, short every bounce until proven otherwise. But I think for your average person, it's probably actually embrace the pain and enjoy the opportunity long term, right?
Well, look, yes, but this is interesting. If you look at can I just briefly, and I'll kick back.
Yeah.
Can you give me the screen?
Yeah.
If we look at the weekly chart, we're looking at, and maybe Birb, love to hear his thoughts on this. Kind of the long-term trend is showing weakening we haven't seen before. This is the index, Birb. Rather than Bitstamp, I switched over to index and trading view. It gives me the kind of average. If you go back to 2015, we had, several weeks below the 200, but it was basically right there.
Yeah.
So we're essentially now, and then we had the bounces, the double test in 18, 19, and the V bottom of COVID V bottom. This is the deepest and longest price penetration of the weekly 200 we've really ever seen. Yep. So we're seeing signs of potential long-term or secular weakening of the trend. The longer we stay over it, the 200 is going to start to flatten out, and after some period of time, roll over and really become resistance. So if you're a hodler and you've always been able to just buy at the 200 and it's bouncing. So here I almost feel like you've got a binary above the 200 bullish, bearish below. So I feel like even if you're hodling, you could exit a hodl at the 200 weekly and just buy back in above the 200, anticipating a strong move back up, resuming the trend. But below this 200, major danger of the long-term thesis being in danger. What do you think about that?
Dude, I 100% agree with that. I mean, I've been pointing that out on this chart forever, but the challenge there, obviously, as you said, so 15, we've only tested it really 4 times, and it's never even closed below for more than 1 week in a row until now, right?
Yeah.
Even down here, like these were close, opening above or very close, as you said. And even March of 2020, we were back above the next week, right? It was down there for 1 week and back above. Well, now the problem here for me is that we just broke above it for like 4 weeks and couldn't hold it. Yeah. Right. So even what you're saying, I would have said the same thing to bulls: buy when you break back above the 200, and now they're mad at me.
Right? Well, they're stopped out. They were stopped out a little, basically at their entry. So you gave them a good plan. You gave them a good plan.
Yeah. But hodlers aren't using those stops, right? Obviously. So, but I mean, the 200 MA, I was going to say, that's the one that sort of concerns me, just because this absolute failure to hold it with any strength. And 25, this lower high isn't confirmed, obviously, until we make a lower low between 17.6. But this really looks like just a terrible, weak bull market rally that people expected to get to 28. The good news, though, is that if that does confirm, then to break out of that bear cycle, for me, it was 32,375 to make that higher high, right? But now you get the benefit of having a higher high to break. So, now we can, if we do make another lower low, which I think a lot of people are expecting the same sweep Cheds was talking about, then we really only have to get above 25,212 to sort of reverse that trend and break that structure. So if we want to look on the bright side, the target's kind of lower now, I think, to break out of this bear trend.
Is it as high confidence a trigger level? And I do agree the May 12th low 25.5 and the recent high, high at 25 create a zone you can use to structure a trade. But is it that necessarily as high confidence as like 30, 31K, given the confluence of the daily MA 200 and the kind of the recapture of that lost support level?
No, and in my mind right now, the only confirmed lower high is 32,375. So that 25,212 only becomes a lower high if we make a lower low, which is going to make a lot of soiled underwear, right? So I don't think people want to see that. I mean, Burbs, are you using these MAs in sort of any similar manner? Are you watching them? I mean, it's pretty simple right here with the 200 MA, right? Such a key line historically.
Yeah. Hang on, maybe chart could help. There's my kind of like a longer term chart for Bitcoin. You know, in all honesty, I had made so many mistakes for misrepresenting the data in the past, like falling into this something that is called apparently like a magical thinking. So we as traders would tend to extrapolate from small data, right? So what we do most often is like that's how our brain works, right? So we just imagine you have a downwards trend, right? There is a triangle, whatever, coil something, right? There is let's say imagine it bursts higher, right? There is another triangle which is exceptionally similar, right? And the people's assumption would be like, okay, I've seen this triangle before, right? It broke upwards. So I take my bet and it definitely is going to actually break upwards again because this is exactly the same pattern, right? So I think that it's very faulty for your money basically to keep assuming things on small data, as we would have not many instances of touches of the 200-week average like at all, right? It's going to be hard to extrapolate or draw any measurable, valid conclusions. Perhaps there is something to it indeed, right? However, hang on, this is actually the 50-week average played down here. But if we take it for a simple, where you get it, there you go. With the moving average given basically a simple bet of 200 weeks, right? So what it's going to show, it's again, of course, it's very. I'd say that the fact that we did actually bounce, back in 2019 or 18, off the 200-week average was rather an accident more than any, magical occurrence that will keep repeating forever. And the fact that we pierced it, through and many times to the downside below that doesn't really invalidate any concept of Bitcoin, right? At times it just happens because there is more volatile aspect to it. There is some war. There is like every single time there is a new narrative. There is a new kind of like a surrounding to it. So it's never going to be exactly the same. So I would say that it may be very risky to trade based on the assumption of just one pattern, right? So imagine we have this kind of like a one instance of a breakdown, right? And perhaps what many people would do, myself included in the past, would take the same kind of like a similar situation as Bitcoin is trading below 200 average. So I'm going to search for the last one occurrence that it happened, and going to see what it actually looked like for the following price action, and it broke upwards. So it means that if Bitcoin, right, doesn't really follow back higher and pull back higher immediately, means that the concept is broken, that the Bitcoin is broken and it's never going to recover, right? This is that kind of like a mental shortcut that we all suffer from subconsciously, and only as soon as you know it, you can control it or control the effect somehow. So arguably, overall, I would say that there is little substance to the fact that we are trading, longest, or probably not longest, perhaps there is, in my opinion, this 2015 to 16 kind of like a consolidation that we had at $100 and $200 back then, where Bitcoin was trading also back and forth, above and below 200-week average, and it didn't really invalidate its concept, right? So I would not really approach it with any sort of like a magical thinking to it, as in, the support breaks, so now it's done, right? Or the support breaks to the upside, so now it's a pump forever, right? So instead, I would probably look at it in form of the trend as a whole. So the trend as a whole is that we are trending down, right, to a 50-week average, which corresponds with basically 50 weeks of average, so almost 52 weeks, so almost an entire year. It is an often used, metric. You would get the combination of those many different indicators showing you that Bitcoin is having relative weakness, just like I said, on the relative basis to stocks, to S&P 500, but at the same time, its own weakness, as it does not really manage to hold and respond positively to this ultra long-term support, right? So TA as a concept just much more corresponds with what's happening in the shorter term, kind of like trends and situations and patterns rather than 200 weeks, right? Because eventually it's about kind of like anchoring to it, and people would find the strong support at $23,000, right? And the fact that it does break it short term, right? Perhaps in the hindsight, it's going to look like in the future that it was like some ultimate fucking bullish, purchasing opportunity or something like that. I don't know what's going to happen, but I think that eventually, if we get some lower, some lower thrusts, some lower pushes, Bitcoin pulling like $13,000-$14,000, perhaps I would actually load in the last chunk of money I was supposed to load.
Birb, when does the secondary trend become the primary? Like, you've got the chart up. You drew the secondary bear trend, which we're in since November. When does that become the primary?
So there are many, of course, schools of classification. I personally kind of like abide that anything between 3 days and 3 weeks is a short-term trend. Anything between 3 weeks and 3 months is a medium-term trend, and anything above that is a long-term trend, right? So I guess like it doesn't matter. In all honesty, what you phrase it, what you frame it, it doesn't change the fact what it is, right? It just helps at times to classify that. For the sake of consistency, I'd say that anything over 3 months for me is a long-term trend.
I was thinking just Dow theory, though. I mean, we can agree the primary trend, is expressed by the 200 weekly moving average, that, the trend in classical charting. We're in a secondary trend, corrective trend since November, right? We've now broken below the prior all-time high. We're spending, you really should, in my opinion, just to push back a little bit, given the time interval between our last touch of the 200 back in March of 2020, we really should have bounced off of it, right? If you look at any strong uptrend, the first time it revisits that 200 after a period of time, it really should bounce off of it. So I think there is some data in that. And I'm wondering, when does the
through it.
Yeah.
I was very surprised how aggressively it went through, and it didn't just pierce it. That weekly went, I think it was around 22 when it happened, and I think it went all the way to 17 in that same week, right? And did not close back above even with the bounce. Pretty aggressive.
Yeah.
You're saying the last one here.
We should have bounced off of that.
I got
like
it right here.
A strong uptrend will bounce off the 200. The first time it visits it, even if it will eventually, break through later.
Right here that I'm talking
about.
So
that's the point. Who defines what Bitcoin should or should not do? Right? That's
I do.
By the way, we've got Fibbo Swanee in the chat, and he's telling us that we need to add more fibs. So while you guys weren't looking, I did, and I haven't looked at the fibs in a while, which actually used to be the core of my strategy, which is kind of funny. But I did not realize actually that bounce at like 17,700 was right off the 78.6 of the March 2020 lows all the way to the 69K high. That's a pretty compelling argument for a bottoming area. Yeah,
but
right.
That played out?
And that doesn't even preclude, by the way, you guys saying like, here's that, the 13,880. I think a lot of people are watching that because that was that April sort of bull trap high, right? So maybe a big wick down there and still closing back around 17,800 or something could be a really compelling bottom. I should also be clear to everyone, just because like we're talking about this, it can go up right now. Right. I just want to be very clear that like this is what we're seeing in a chart, but we are all aware that nobody has a crystal ball, because inevitably people will come back and say, well, you guys were all bearish, whatever. Right. And I saw somebody else asking, here you go. Drew. What's up, Drew? How about we discuss the strength in DXY? This has implications in all facets. And this is really a time, I think, right now when you can watch the dollar and see what's happening with other markets. It's really interesting today, actually, in that context, because we've been talking about maybe this would be a double top, which, by the way, we wouldn't know unless it breaks below 104 down here anyways, because that's the neckline between them. But conceptually, the idea of a double top is this consolidating below resistance to pop, because then look out below on everything, right? Or is it going to get rejected here? And today, this is it's too early to tell, but that's a hell of a rejection so far, right? On an attempt to break that swing high. So for now, hasn't even closed, right? This candle was also terrible about 3 hours before the close and then ended up bullish. So it's very hard to tell. But if this gets squarely rejected and we see a major dump, maybe we get at least some relief here. Hard to say bottoming, though. I mean, have you guys been watching the dollar at all?
Yeah. By all means, quite a lot, actually. like I said, mainly because I kind of like stopped having this narrative of thinking only within crypto terms, right? I start kind of like considering that an asset class or a asset class among many others, right? And I use that mainly as my kind of like a risk driver for my portfolio overall. So I don't really kind of like look at crypto without any other context anymore, right? So I do account for dollar, and well, like in all honesty, dollar is right now in a position. I actually dropped a tweet on that, but there's this chart I also may play whenever you feel like. And the dollar is breaking for its 20-year highs, and it basically has about 2 days to close. So
Birb, if
from
you
a
share your chart,
technical,
I can bring it up at any point. I didn't even realize
yeah.
I was clicking through charts here while that are visible. So I was getting
Yeah.
ready to move on to ETH here. I'll add you here. There you go.
Yeah, let me know when it's on.
You're good.
So this is the case, right? Dollar is trading right now at 108.75, right? The main support, the main resistance, 104 approximately, and arguably, right? And we are talking about the 20-year highs right now. Like dollar is really high on a 20-year basis, right? So at on one side, it's telling you that it's some exceptional record, right? Like record that happens once every 20 years is not really something to be ignored, in my opinion. At the same time, you do look at this massive consolidation. So again, like if you want to just guess or put some frames, put some numbers to it, we could measure that kind of like a pattern and say it's 70 basis points, kind of like a distance or this vertical base size height, which technically gives you price objective somewhere around 120, which matches the previous resistance on blah, 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 and all this stuff, right? So there is some truth to it, but the way I look at it, again, is I look at it from the perspective of developing trends, right? I think this is where we all as traders and as analysts, start kind of like try and search between many thousands of indicators just to come back to one and the same kind of like a merit of understanding what the trend is, right? And apparently it's not really as simple as it may seem. So I would argue that this breakout, much more than, just saying, when using this breakout for saying, oh yeah, it's definitely going to visit 120 because whatever. I look at it mainly as a kind of like this trend indication that it's breaking out of the 7-year long consolidation range, and it's breaking into an actual trend, and it's starting to go more and more vertical, right? And as much as it goes more and more vertical, I would argue that, well, this is of course bringing much more volatility, and at the same time, this is where the momentum is, and the momentum is a principle which basically tells you about the money moving in certain direction. Once the movie clump moves in this direction, it's hard to stop it, just like a rolling truck, right, with no driver. It's not going to it's going to stop eventually itself, but it really has to meet certain very, very thick wall to crash into to stop immediately, right? So it's much more likely for this trend to persist, to continue higher, until it slowly kind of like degrades and just decreases its power. So I would argue that this bullish breakout on dollar, if it's additionally if it gets its additional technical confirmation with a monthly close through over 110 points or something like this, it adds certain technical importance and significance to it. However, of course, what drives the dollar prices to a major extent is the interest rates, right? And what Jay Powell and the entire FOMC committee just ruled out for the interest rates in the short and medium term, that is what is going to define the dollar strength. And I don't see any single reason why, if there is some unpredictable event, like we had war this year so far, right? So like you cannot rule out a situation when there is a bunch of other wars coming up, right? There's a Taiwan situation with China, right? There is this entire kind of like a boiling water, which is boiling right now, in this kind of like a container, and it may start spilling all of a sudden. And when it does, why, there is basically no reason for the dollar not to invert and start going south, for instance, right? So
we all have that same macro trend line. Actually, I can see Cheds. I'm gonna bring yours up in a second, but like if I zoom out to the monthly, I literally have one line on the chart, and the exact same thing about the 20 trend. It's it, right? So like if I'm even talking about like the quote unquote bullish case, it's like a retest of this before up or something, right? So when I talk about this double top, I don't think it's a macro bullish thing necessarily. I think that it just could lead to a relief rally, right? And so I'm going to bring Cheds up too. So I can see it has the exact same area marked on his chart. So obvious.
Yeah, I don't have too much to add. It's great analysis. I mean, you just have a clear break of resistance. This is a weekly time frame. It's riding that EMA 8 nicely. So it's just a really strong uptrend. It's one of those things where you don't want to be too quick to just assume it's going to fail. You know, we talk about a double top. I mean, it's just two thrusts. I mean, how do you form like an ascending triangle, right? You have the two thrusts and you have a higher demand and you break out. So, you know, people call it double top, but I mean, who, you know, could be a double, you know, could be an ascending triangle forming or something. It's really just two thrusts at this point. It's incredibly bullish. You know, what it's probably going to do is make it hard for anyone to trade it. It's going to drop back down and then bounce and, you know, whipsaw around. But you step back out, larger trend, incredibly strong, using the moving average well above prior resistance. It's an uptrend.
Yeah. So obviously the major narrative then in the crypto market, if you sort of zoom in and ignore the macro, which you obviously can't, is the ETH merge, right? And I think a lot of people are more interested, honestly, in Ethereum than Bitcoin. I can't remember the guy's name, but I actually
Vitalik
today. Well, yes, I remember his name. I remember that guy's name. But there was a amazing thread today from Joshua Lim from I think he's from Genesis, or you know, yeah, he's head of derivatives at Genesis, which made a pretty like compelling case based on the data that you know, Bitcoin has become sort of the only asset that you can hedge against everything that's happening, which is sort of squashed the volatility and made it a lot more boring. And that's sort of driving a lot of the money into Ethereum, or a lot of the interest, because it, you know, is still much more volatile and maybe has a more bullish case coming. Do you guys have any particular thoughts on ETH here?
I'll just go real quick and I want to hear Birb. But yeah, I think Ethereum actually kind of held up Bitcoin. And it made sense to me why we had this bearish divergence, kind of the move up unsupported by volume. And Ethereum, just a super beautiful bounce, and it's rare. You get this clean in the market. You know, when Ethereum was breaking out, and we go back to like middle of July, this is just, pardon me, it was just such clean structure. You don't normally get this type of a clean structure, you know, to execute your risk. And this was in a very bearish environment. So when you're really looking to touch nothing, Ethereum gave you a beautiful ascending triangle with a little bit of a fake out, but you had the clear break of the horizontal level. Bounce right to 2K, psychological resistance, May highs. I think you got to buy it at 1280, 1290, you know, 1300 until proven otherwise. I think it held up the market. I think we see a clear rejection. And
I literally never do like videos that are like price targets, but I actually made a video last week that was like, I want to buy Ethereum at 1284.
Yeah, I'm 1283, bro. I'm underbidding.
I mean, for me, like you said, we had that clear ascending triangle. It hit its target in the 1800s, right?
Yeah.
Overshot 2000, like this kind of ugly inverse head and shoulders, shot it down to 1680. And then this is what I drew. Obviously, it went above it, but this is the idea that I'm looking at. Of course, it's mooning now, but like that we were sort of consolidating.
Oh, can I talk one more thing?
Let me go one more retested. Like 1284 is the most obvious massive resistance broken out that could be retested support. I'm going to guess that Birb has something similar probably on his chart.
Now, Cheds, go.
I want to go real quick. Daily, go back to me real quick. Daily MA20. We talked about the EMA 34 for Bitcoin. It's been daily MA20, the middle Bollinger Band for Ethereum. And if you look at since the peak back in November, it was resistance, not as clean initially, but really, especially since like the March top, late March, April top, MA20, 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 and all these relief rallies, that's where it was stalling at the daily MA20, MA20 as well, even here, right, through June. And then we broke above and it's support, right? So, I mean, it's really paying attention to the daily MA20. So now if we get some kind of a bounce off of this zone, we get this 20 curling over, you want to be careful and really pay attention to that MA20. It needs to clear that first. We want to listen to the price. The price is telling us we want to pay attention to the daily MA20. Back to you, Birb.
No, it makes sense.
I'll
makes
pull
sense.
your
Actually,
screen up. One second.
Cool.
But I see us on it. So I think, yeah, there you go.
Yeah. So I guess, you know, I'm not going to be too original. Well, overall, when I compare Bitcoin to ETH, you know, it's actually looking much better. And the simplest way to look at it is, again, just go and see the relative position against its 200-day average, right? So Bitcoin is basically here, and really is like I said, missed this entire opportunity to kind of like catch up with the stocks, and it failed really poorly. It doesn't imply that it's going to like go to hell immediately. It's just a fact, right? So here, just the same chart and the same setup for ETH, which got way closer and behave much more efficiently, when you compare that with stocks. So I would argue that ETH is in a relative strength here. Of course, you see that in the better ETH BTC pair, right? But eventually, this also tells me that, as long as we kind of like keep, and stay away from breaking this 1250, just like you mentioned, this area. You said I'm going to be right behind you in the 1282, right? Whatever. But like, as long as it doesn't really invalidate this 1250 area, again, it's not a specific level. It's hard for the entire world to position themselves at one specific line and nothing really outside it. So take this area with a grain of salt, but I argue 1250, as long as it holds through, and it perhaps rounds up nicely with some saucer, then ETH may really just push higher eventually if there is a positive turn, for the things, and there is September as FOMC coming up telling you that they're going to be more dovish, and instead of 75 basis points, they're going to hike the rates for about 50 basis points, right, or something like this. So I'm not ruling out such a positive kind of like a situation where if just goes sideways locally, right? You can see that probably also as a gap at where the 200-day average, 200-week averages, right? That's the area around 1250. So I would argue there are chances for ETH, much better than for Bitcoin, to consolidate somewhere around 200-week average and potentially pierce higher. However, the bullish turn will need to be given, from the macroeconomic side. But overall, again, I would be skeptical about that because we are in the fucking recession. So take it all, and all the bullish signs, are really vulnerable much more than ever before, in my opinion.
Are you guys looking at anything outside of Bitcoin and Ethereum right now in the crypto market, or is it just waiting?
There's a couple nice altcoins like CHZ, TRB. There's just a few that are like decent that are trading above their daily MA200s, but for the most part, most of them look pretty rough. What about you, man?
I'm not really looking at very much at all, to be quite honest. It's it's not even a matter of, it has nothing to do with being bearish on any single coin. I just think we all understand how this market moves, and still there's some confidence in the market as a whole. It's, you're going to get probably more downside from an altcoin than you are from Bitcoin. So it's kind of worth just sitting. I barely even honestly scan the charts. In a bull market, like, my wife opens my computer and she's like, you are a spaz. Like, how do you have 200 tabs open? Now I have like 4. DXY, Ethereum, Bitcoin, SPY, ES or something. And everyone's, well, QQQ. There's just very little to look at, in my opinion. And it's the first time for me since trading. I've obviously had to consider macro when doing stocks and Forex and all these things in the past, but it's really the first time since I started trading crypto at the late 2016, early 17, that I've been concerned with macro at all. Like, that I've even thought about it, it's a bit strange. And that's why I think I was a bit of a laggard to sort of accept the correlations and what was happening in the market, because, my previous bias was just, hey, there's a beautifully technical market. We can just trade it as it is and not pay attention. Now, all of a sudden, it's literally more important probably what's happening with DXY or Jerome Powell than it is to even look at charts, which is just a crazy sort of spot to be in, I think, with the crypto market. I'm not sure if that's good or bad long term.
I just want to piggyback on what Birb said. I mean, people like relative strength. People look at BTC pairs. You don't even necessarily have to do that. He just showed you how Ethereum was almost able to reach the its daily MA200 and Bitcoin wasn't. So if you just know what the Bitcoin chart is doing in relation to some key levels, then you can go look at anything else and see, okay, it's stronger, weaker, or equal to Bitcoin, and then comparing Bitcoin to equities as well. Just that's a simple method of relative strength. I want to just underline what Birb said.
Yeah, it makes sense. If you actually should just flash the screen real quick, there is this entire performance chart that I have. I watch, the top M caps mainly as to build a little bit of a narrative or a context to it. And the one thing that I'm most Surprised, if I were to say, is the TRX performance, because apparently it leads, like it's the best underperformer, right? Overall, it's lost the least amount of its value in the price. So 20% down year to date, while the far opposite edge is Bitcoin Cash. So that one I'm not surprised, but minus 75%. And then Bitcoin, you basically get to see this in the red, about minus 60%, right, year to date. So you would argue that there is this clear, kind of like a situation where TRX is a lone rider, right? I'm not really touching it. I'm not trading it. I mainly trade Bitcoin and ETH, as long as that there is this protective environment and not really supporting much more bullish tails. I don't really feel the environment is your ally anymore, right? We're not in a bull market, so holding on to too many altcoins would just place you much more likely in this clump of performers of about 50, 70, 80% down, rather than being in this exceptional TRX kind of like a situation. And then there's this breadth. There's this breadth indicator I'm using, if you will. Where is it? Well, you might have it here. Long story short, I've recently got very, very good addition to my team. Pedro, great guy from Portugal. Amazingly talented analyst, also builds systems. And one of the indicators he measures is the breadth, right? Which is, in this context, in the short-term way, the percentage of crypto assets above their 20-day averages, trends, respectively, right? So here this was from a couple of days ago. Right now it's far worse. But you were looking at about basically 10% or less than 10% coins of the entire pool for cryptos are above their 20-day average, which shows you about the dominance of the bears, right? So if there is such a bearish environment, this makes it very rare, probability-wise, for bulls to appear. So as long as it is this way, then the bulls are in a worse territory by definition and by the odds, right? And it would be fairly mistaken to assume that this tiny little percent of the bulls is going to lead this entire market out of the woods. So I'd argue that there are too many bearish signs and too many bearish forces right now to kind of like invert it immediately right away. But the only way I see crypto is kind of like immediately recover and bring in some magical reversal that would make everybody happy, would be some exogenous signal, as in you get again Elon Musk revealing that he was the Satoshi Nakamoto and that he is going to rule in crypto in the entire world, right? Or something like this. So unless you really get to see such an exceptional crypto favoring situation, I don't really see the reason why crypto would not pull up another instance of minus 20% drawdowns.
Listen, we've got like 8 minutes left, everyone, that I can keep these guys busy here before they have to go back to their lives. I'm gonna let you guys in the chat, anyone in the chat, if you have any quick questions, Cheds, Birb, is that okay? If they have questions, you guys ask me questions all the time, and if you guys have any quick questions for these guys, we can do sort of a lightning round here. People seem to really like what you guys are talking about here, though, judging by the comments, which I have not been tracking. Before they start asking, here's one. Can ETH really make gains before the merge? Seems like we've not achieved that much and we're only 2 weeks away. Anyone have a quick answer to that?
Why not? I mean, it can have a nice bounce from here. We're kind of drifting back towards the breakout level. It could bounce, 15 to 1700. That's a pretty good move. Or I'm not saying it will, but sure, it can do a lot of things. I think probably there'll be some type of a dead cat push before the merge. It would be my gut instinct.
Yeah. I think that's probably true. And I think the merge, it's one of those things. It's just not a technically important event at the date that it actually happens, right? People they get a hard on for the halving with Bitcoin, same thing. And then all of a sudden, 6 months later, it starts to kick in. And I think this is similar, right? To see the supply reduction and to see it actually matter over time is going to take quite a while. He wants to know why you're wearing a mask, Cheds.
Privacy. That's it,
I think it's obvious. Can you explain more?
May I just circle back real quick?
Yeah.
Just circling back real flash quick to the ETH merge. The only question you want to get answered to yourself is: Are you really excited about ETH merge? If the answer is not, then there's probably little chance for it to go up. right?
Makes
Because
perfect sense.
there would need to be like some interest to it to drive the rally up. Sorry about that. Go.
Can you explain more in detail a bottom accumulation phase and how long can it last? Anyone?
Long
Yeah.
time, right? You
Because,
know,
I mean, last summer
yeah.
people were upset that it took like 3 months and it could have been 3 years.
I think time is not important. I mean, you can a bottom can be you can be going sideways for so long that you'll force some type of a bottoming. It doesn't mean you'll follow through on that bounce. But you just have to be patient, let the price structure develop. There's not always a trade. There's often just chop and confusion. If you just wait for a trade like that Ethereum 1270 long, you know, back in July, you'll be okay. Be patient. You don't have to trade every day.
Such an important point. Right. I mean, that was my point in making that video about Ethereum was I'm not saying it's going to bounce. I'm not saying it's going up or down. I'm just saying, like, if you're looking for an entry, go ahead and set bids now.
Yeah.
Right. Do it now, because when it actually gets there, you're going to panic and think it has to go lower, and you're going to forget everything that your entire premise for setting those bids. But like setting a stink bid and getting the bottom of that wick, which could be generational or even a temporary chance for profit, is the way to do it. Doesn't mean it has to be the bottom and the bottom accumulation, right? So what do we got? What's the panel's view on meme coin narrative in crypto? I haven't even been following Dogechain, but I can say that Cheds nails it every single time a meme coin, dog coin pumps. He goes, "That's the end of the bull rally for all crypto. Short everything." Right? I see it every time.
Yeah. I mean, it's fair enough. I don't know much about this chain, but when I see weak downtrends bouncing, you know, I get thirsty. I get hungry. I'm looking to fade that move. You know what I mean?
Yeah. Birb, do you have any thoughts?
No. It makes sense. I mean, you know, memes pump whenever there is enough people in the pool, right? And it just comes up with the bread, and it just comes with the overall sentiment. And if people are exceptionally, you know, optimistic and they are exuberant about the money they spend, and they would throw in, oh yeah, why not? I put in like my lifetime savings in a fucking shitcoin because of I can, right? Then unless it's this phase, then the Dogecoin and Doge derivatives are not going to pump like that, in my opinion.
Do you think there are institutional investors who avoid Bitcoin for ESG or PR reasons that will be excited about the ETH merge? I personally think that's possible, but right now Ethereum is still proof of work and it hasn't even converted over. So I think that that's a future idea, not something they're probably actively trading on. Do you guys agree?
It's above my head. It's above my head, this question.
Yeah. Birb, you generally agree
with
that?
No, it's the same. Like I said, you know, as long as it doesn't really excite you as a trader, to whoever is asking this question, you know, it's likely not going to be much of interest to the institutionals because they are also driven by demand, right? So when there's no demand in the market, they are not really willing to open their new kind of like venues to let people purchase all their ETFs, you know, Bitcoin and so on. So they're driven by demand, and they often make mistakes, the same ones that the other people would do.
Yep. Ched, specifically for you, Ched's long-term 10-year bullish, and then there's a question mark. I guess he's asking if you zoom out, do you get bullish on the asset, or are you just playing it short-term? And
that's a great question. 10 years probably, but I don't know. Like, I don't even know if there's a guarantee we make a new all-time high in the next 10 years. You know, I'm looking at the weakening long-term trend. You know, we could drop. I have a worst case scenario where we drop to 12 to 14, we base and we break below that. Now that becomes resistance and we trade sub 10K for like a year or two.
Like when Bitcoin just sat at $6,000 forever and everyone thought it was the bottom and it dropped right through into the threes.
You know, maybe the next bull run is 10K to 50K. That's a 5X. That'd be an unbelievable bull run. And then it makes a macro lower high off the 69K top. I just we're not owed anything. I just don't believe we're owed anything. Just because something happened in the past doesn't mean it's going to happen in the future. We just broke the all-time high. It's never happened before. We're not owed anything. So, you know, probably slightly bullish, but I think be prepared for a lot of pain, and it's not going to be easy.
Now, in 6-month time frame, we have bearish engulfing candle. Does it mean that we can go lower more? Do you guys look at 6-month candles?
I don't think we can even look at a monthly time frame because there's not a 200 moving average. In my opinion, the 200 moving average is the trend. I think weekly is the longest time frame that Bitcoin should be looked at personally. That's just my personal view.
Birb?
No, it makes sense. I don't watch, you know, quarterly anything or more than quarterly unless it's for fun and for memes, right? So
yeah, memes are good.
Yeah, somebody said here
They
with
always, always.
yeah, with institutional adoption, we won't go to all-time highs soon. Wow. Yeah, I think that part of the nuance of institutional adoption is that, listen, for like the hardcore believers and the maxis, they believe that Bitcoin was created to opt out of that system.
Yeah.
But then, of course, you have this cognitive dissonance where you say, what if Michael Saylor and friends buy it, the number goes up, right? But what we're actually getting, referring back to that thread that I'll maybe share again later, when institutions come in, they just use it as an instrument like they do every other market. And it's actually dampening the price at the moment because it gives them the ability to short something that's extremely liquid and more volatile when there's a downtrend in all markets. So institutional adoption is one of those things where, you know, be careful what you ask for. Yeah. Because if we're talking about institutions like, yeah, if it's Tesla buying a massive amount of Bitcoin for their balance sheet, great. But if you're talking about institutions as hedge funds and traders, they're more likely to short the shit out of it than to long it. That's just reality.
Yeah.
Is that the same
take
you guys would have?
Yeah, but besides, when you think about it, like I said, you know, the institutions, I think there is this big misconception. Institutions are people, right? They are just fixed to kind of like fixed to some agreement. That's all. But they are still people. They are still ongoing the very same emotional processes. They are still the money managers. You know, portfolio managers are really expected to perform with certain, you know, rates a year, right? That they are supposed to trade, you know, trade out the results for about 10-15% a year. Otherwise they get fired, right? So they would still feel the same pressure. They would still feel the same mistakes, despite they are institutions, so-called, right? So besides, I do believe that what really would drive all-time high, again, there is nobody to tell you that it's never going to reach all-time high. Same that it's never going to be anybody to tell you that it's never going or ever going to reach all-time high. Basically, right? Nobody knows what's going to happen. Yeah. But what I do know and what I do believe that well, it's for those who watched, you know, for instance, yesterday's VMAs, right? There was this metaverse, there was this ape stuff going on, right, with Snoop Dogg and with Eminem. It was funny to watch anyway, but that's the adoption. It happens slowly. It happens one step at a time. It takes time. It takes years. So I wouldn't be surprised if, you know, in the next 2, 3, 4 years, we really trade above the all-time highs. However, that's not something that I'm just, you know, really visualizing or using this law of attraction that I'm just trading 70 or $100,000 Bitcoin. If it happens, cool, but I'm not going to base my entire strategy on that.
Yeah. I know we got to go now, guys. Just to be clear for everyone, I do believe that we will eventually make an all-time high, but I also agree with Cheds that it's certainly not owed to us.
That's it. That's
right.
it, brother.
I think we will, because I believe that all markets trend up and to the right, and eventually, you know, whether it's going to be because they print a hell of a lot more money or because of some catalyst, just inevitably you'll get there. But do I say that happens this year? Certainly not. Do I say 3 years? I have no idea. I do believe it'll eventually happen, but I do also think that, to Ched's point, if it takes long enough, most of you might have given up by then anyways and not care, right? There might be something else that's shinier and everybody's trading. So just want to be clear, the one thing that I got out of this stream is that a lot of us are watching the 1280 area of Ethereum, which is scary, right? And I think it's going to be very interesting to watch DXY. Guys, first of all, thank you so much for doing this. I know we're running over time, and you guys are, you know, two of my favorites. Ched, we're getting your ass to Vegas. Birb and I are going to start some sort of group chat, and we're just going to bother you until you finally show up. And just want to give you guys a chance to tell everybody where to follow you, what you guys are up to, because you guys, I know, have a lot. Cheds, I've seen the spaces now that you've been doing so frequently. They're really awesome.
I love you. You know, Twitter, it's like, what do you mean? You're an idiot. It's like, no, let's have a conversation. That's what Spaces is for. People ask questions. It makes it more personal. I'm on Twitter at Big Cheds, YouTube Cheds Trading. If you know anyone fighting cancer, I'll email you my memoir, chedstrading@gmail.com. Author of Trading Wisdom. The book's available for free on my YouTube at Cheds Trading. Book 3 is coming out later this year. It's a book of quotes. And I'm just happy to be here. Thanks for having me, guys.
Awesome.
Love it. Yeah, and the final quote from my side is just to let everybody know so that you should definitely follow Scott and Cheds. That's all I have to say.
We'll take it. Well, guys, follow both of these guys, and of course, guys, we'll do this again. So we'll do it again soon. But for everyone else, we're gonna do it again. I'm telling you, we're gonna do it again in person in Vegas. So get ready. Whether Cheds accepts it now or not, I can't tell you, but it's going to happen.
We'll see. Maybe. We'll see.
We can get you out there for like 2 days, throw some
Hell
dice,
yeah.
an hour on stage, free trip. Come
Woo.
on, let's do this. Anyways, guys,
I'm
thank you
down.
very much, everybody. I will be back tomorrow morning at 9:30 a.m. Eastern Standard Time. Peace out, guys. Thank you again.
Let's go.